The latest print on the U.S. economy has been released after being delayed due to the government shutdown there. The Consumer Price Index for September shows inflation running at 3% in the 12 months through September, slightly slower than consensus forecast for 3.1. Let's get perspective now on that and some ideas for your portfolio at the same time. Joining me is Robert Schein, Chief Investment Officer at Blanke Schein Wealth Management. Robert, thanks very much for joining us.
Good morning.
The numbers today, any surprises or pretty much what people were expecting, even with the delay?
S&P futures have jumped as a result of the tame, if you will, CPI. So no surprises there in that CPI report. Finally, we get some government data. I think this is the most important one, setting up for the Federal Reserve next week. This gives them cover. Futures jumped from 90% of a rate cut next week to about a 98% right now. So we could expect a rate cut next week, and that's why futures are up.
And were there any concerning numbers in there? Was most of it all just good?
Right now, inflation is trending in the right direction, which is coming down year over year, month over month, which is what markets really want to see. Energy was a little bit high, but we believe energy will work its way out. We're seeing energy prices come down across the board. But right now, I think the inflation number was no surprises, but nothing to be worried about at this moment.
And with this pretty much a sure bet now, a cut next week, are the markets reacting to next week today and the next few days? We won't see much movement later next week?
Yeah, we could see the market front run the Fed. And then, as we always see with the press conference for the Federal Reserve, when Jerome Powell speaks, markets then react. So we want to see the quantitative tightening cycle end. I think that's what the markets will be sort of parsing out in his commentary Wednesday afternoon. And then beyond that, I think what the bigger impact to financial markets would be, let's say, the meetings between China and the U.S., if that possibly proceeds, and then if so, does anything constructive come of that? So it's basically trade talk moving forward after the Fed.
And of course, we've got the tech stocks, a lot of the big reports coming out next week. Will they benefit from everything that's unfolding right now?
I think for the most part, what we want to see from the earnings on the conference calls, not only is the guidance, but is the CapEx spending continuing in the AI chip arms race, right? The semiconductor spend. We're seeing that. We're going to hear that from NVIDIA. Every chip that they have right now is 10 times oversubscribed. We saw Intel with a great report. We're going to see, Oracle just came out with a blockbuster deal that they reported in terms of investing in AI for the future. With a data center. So yeah, I think it's really tech is on deck right now, but the S&P earnings right now of those that have reported, over 86% of those companies have met and exceeded expectations. So earnings are growing, which is a positive.
And so what do you do now if you're an investor at this point? Where do you look?
Yeah, so you want to look at most, if not all, if you have exposure to S&P 500 or the triple Qs, which is technology and NASDAQ, you're overweight right now in technology. So looking into the new year, as interest rates come down, other sectors are going to be a little bit more favorable. Think more defensive in your portfolio. So you could look at some healthcare, which is undervalued relative to the PE that you would see in technology. Financials should do well as interest rates continue to come down, even down the capital spectrum. So large caps and mega caps, you could start moving down to mid caps and small caps. And then also international looks, from a valuation standpoint, very interesting for 2026.
Okay, and I just want to get in your choices right now. You got some picks for us. First up is Apple. It seems a little bit of a shine back on it.
Yeah, Apple is now playing catch up. I think it's the big relief with regards to their announcements. Obviously, the AI is still the question mark with regards to Apple, but let's keep in mind, Apple is a cash flow king with a 2 billion install base of just those phones and every other device that they have. So the refresh cycle is going to be real. I think the 17 launch is exciting, more exciting than what the markets were hoping for or at least expecting. So that's good. Nice wind in the sail for Apple moving into 2026.
And you're still bullish on NVIDIA as well. No concerns.
Yeah, NVIDIA is one of those that has been a perennial in the marketplace right now. If we see any wavering, across the spectrum, it would come from NVIDIA. So we all eyes on deck, when they report. But like I said before, every chip that they're producing today is 10 times oversubscribed, and so they're winning the race, and they're going to continue right now.
Okay, and we're almost out of time, but Berkshire Hathaway, what do you like about it?
$345 billion in cash right now. Warren Buffett, who is, sunsetting into retirement, still is going to hand over the reins to Greg Abel with a huge war chest and take advantage of market volatility moving forward.
Okay, perfect. Robert, thank you very much for wrapping that up quickly. We appreciate it.
Thank you.
Robert Schein is Chief Investment Officer at Blanke Schein Wealth Management.